We have the management now joining us, Mr. Krishna Bodanapu, who is Managing Director and CEO at Cyient. Sir, thank you very much for joining us here on NDTV Profit. It's a pleasure to have you on the show today. Can you talk to us about the fourth quarter earnings and what really happened as far as the bottom line is concerned?
Yes, absolutely. Good afternoon, and thank you for having me on the call. So what happened in the fourth quarter is there were three extraordinary or one-time items that impacted us. If you look at the bonus act that's come in India, just the way that our salaries are structured and the way that the salaries are worded, we had a large impact that we had to take in for one time, because the bonus act came in Q4, but it's also retroactive for the whole year. So we had to take 3 quarters of impact, which was about 9 crores. And again, that's a one-time impact because going forward, we will bake the bonus requirements into the cost to company or the regular salary. So there was a one-time impact of bonus act of 9 crores. Excuse me. The second thing that happened is earlier we used to depreciate our assets down to 5% of their purchase value. Whereas there's been some change in the depreciation policy and so on and so forth, which meant that a lot of the historic assets we had to depreciate down to 0%. So that had another impact of about 5 crores, which is again a one-time impact because it was just the depreciation of existing assets down. And the third thing that happened is that on FX also we had a net loss of about 4.5 crores or so. Again, we follow a certain hedging policy. The policy has typically worked quite well, but this time around we had a net impact of about 5 crores. So all these three put together, there was a overall impact of about 20 crores, which is a one-time impact for this quarter, and that's what shows up in the rather stark drop in net profit. So if you take off all these impacts, then we still have a small drop, but it's a very marginal drop of about 2.5% in profit. But really, the number happened because of these three issues that happened one time this quarter or last quarter.
Okay. Apart from this, even margins have disappointed significantly in this quarter. Could you tell us what happened on the margin front?
So margin was really a function of the mix of the revenue. And there is always cyclicality and volatility in various businesses and how it works and so on. And it's just that the margin of the business that came in this quarter was slightly lower. And it's again a mix of the kind of services that we provide or the kind of services that we provide. It's just the way the mix fell this quarter with some of the larger software-related deals that we had anticipated in our service managed business, which was called Cyient, didn't come through. But going forward, again, the outlook remains reasonable. We believe that during the course of the year, margin will increase at least by 150 basis points, and that's what we're working towards.
So 150 basis points increase from the current level of 13%. Is that what you're saying in the first quarter?
13%, yes. No, for the year, sorry. So year on year, right now we're at 13.7%, or we were at 13.7% for FY16. FY17 for the year, we believe will increase by 150 basis points.
Okay. Now, talking about Cyient business in particular, what really gives you this confidence that things are likely to look up, likely to get better in the near term? Do we have some, strong deal pipeline that you're working around with, which is likely to translate into better earnings in Q1?
Absolutely. So there's two elements of the business there. There is a element which is software sales, and the software sales then drives the services sales, which is really the implementation of software, etc., that we do. The services business continues to remain on track. I mean, again, we're not seeing massive amounts of growth, but we see a reasonable traction for that business. But what didn't happen in Q4 was some of the software deals that we had anticipated to happen. They either got pushed out to Q1 or Q2, and we believe that those are coming back, and that gives us the confidence that basis those deals, software will again continue to come back to a good growth rate, and the services business will really dovetail off of that.
Okay. And this recovery in margins that you're talking about of 150 basis points, how soon do we see that coming in? Second half of the year or in the first half of the year itself?
No, I think it will happen through the course of the year. So Like you said, we ended Q4 at 13%, and we have to start we're starting to work on how the recovery happens. But I'll just say that it's not just an anticipation that it'll happen in the second half of the year, because just the way mathematics work, that won't help us achieve 150 basis points increase.
But in the first quarter, which is the current quarter, there would be a wage hike impact as well. So what is the outlook for Q1?
So we're trying to work around the impact of the wage hike. If you look at it last year, we actually managed the wage hike impact quite well. In spite of the wage hike in Q1 of FY16, our margins went up in Q1 compared to Q4. Again, it's a little bit early to comment on the exact impact, but we're working on it to make sure that the impact is minimized, because there will be a wage hike and that will happen in Q1. But we're working on it to see how best we can minimize it or even keep the margins flat. Were
there some specific client issues as well that you were facing?
Not really. I think at this point, we did have a little bit of a rough year in FY16 with various client issues. But at this point in time, I'm quite confident that at least the big issues and the big clients are beyond us. We're seeing some good growth in our top clients, and that will continue.
What about Ranksons? What is the outlook on that front?
So we ended up FY16 at about $39 million or so of revenue. We believe that will grow 50% this year. Again, that is basis the backlog that's already there. We have enough backlog to deliver at least what we delivered last year, which is the roughly $39 million. Plus, there's other things that will build off of that. I do want to say that in Q1, Ranksons' revenue will come down compared to Q4. It's just the cyclicality of the business. But having said that, and looking at the backlog, I'm still confident that in spite of what will happen in Q1, for the year, we'll do a 50% growth.
Okay. And last question, any other acquisition that you're working around with?
We're just working on it. We continue to work on it. I'll leave it at that.